if anyone can post the link to the YouTube into the VTF, I would appreciate it. And let's get started. I am, like always, an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. I'm long the market. I got no shorts. I'm out of my shorts. Maybe I should be looking at AMC again to get back in. I don't think it's bounced enough yet. Where's that AMC? Yeah, not here. Not ready. Not ready for me to reshort it. Let's go to the market. All right. S&P. The volatility, I guess, continues. S&P huge day today, up 1.6%. NASDAQ up 2.25%. IWM up 1.7%, which I'm actually a little bit disappointed about. But let's talk about it. So, look, the market did exactly what, Rowan? What do you want, Rowan? The market did exactly what we were expecting in the morning meeting today. We called it perfectly. We said that the Fed was going to meet the expectations that they had set. we said that the Fed was going to meet the expectations that they had set of increasing the speed of the tapering to $30 billion a month. That they were not going to increase interest rates today. I don't know who said that. It was ridiculous. They did, fast forward that dot plot or whatever. So they're looking for 3 interest rate hikes in 2022. But that's what the market had already been pricing in. The market had been pricing in the increase in the tapering and the speeding up of interest rates to that tune exactly. And in my opinion, thanks. In my opinion, bam, there we go. In my opinion, that was actually overly priced in. And how do we know, right? So what stocks are going to get hurt the most on higher interest rates is growth stocks. Well, I mean, you type up the charts of these growth stocks, and it's like, oh my God, never seen anything like this, really. Like the way that, like the just constant sea of red on some of these names here from like the last 2 months is just completely insane. Why? Well, that's exactly probably what should happen, right? These stocks should be coming down pretty big if interest rates are going up because they're growth stocks and they're reliant on cheap and easy and free money in order to grow and eventually, hopefully someday become profitable. So it made sense that would happen, but the degree to which these things have sold off over the course of the last month is mesmerizing, honestly. The weakness in some of these names, and there is just so many of them. Just take your pick. Like any of these Cathy Wood stocks, really any of them. These marijuana stocks, all of it. The destruction has just been incredible, and that's with the S&P at all-time highs. That's what makes me believe. It's that price action makes me believe that this was already foretold, this was already priced into the market, and that once we can get past it, what does the market hate more than anything? The market hates uncertainty. So, well, we don't have uncertainty anymore. We know what's going to happen. The Fed is going to increase the rate of tapering. They're going to increase interest rates in 2022. It just is what it is. We got that past us, and the market ripped. We were weak going into it, too. So not only is the S&P up 1.5% and the NASDAQ up 2.25%, but we were like negative a percentage point for some of these indices going into that Fed meeting. So when you think about that, that's like a huge intraday move. And again, to pat the team on the back here, give myself some credit, I guess. The market did literally exactly what we were looking for. The only thing that I'm a little bit disappointed about, and I guess I shouldn't be, is I wanted to see a little bit of rotation with the rally. and we didn't really. The rally was very broad-based, which is healthy, but I actually wanted to see a little bit of money come out of XLU. Come out of basically the things, the fear trades. What have the fear trades been? XLU, XLP, right? Utilities, staples, Procter & Gamble. I got Procter & Gamble in my IRA, man. I want the stock to keep going up. But what I'm talking about is this has been a fear trade. Apple's been a fear trade. And I was long Apple for this move today. I got out of it 179 or something like that. So it was actually a pretty dynamite trade for me again in Apple. But I really wanted to see, in addition to the rally that we saw in a lot of these beaten up stocks, Fubo putting in a good candle today, DKNG putting in a good candle today, Peloton honestly not that great, but a lot of these beaten up stocks put in pretty good candles that I do finally think that the low from some of these stocks, at least a short-term low, it is in today. And I think that we're going to see a bigger rally back in these things. At least to move to the 21 EMA, like these previous resistance levels, DKNG back to $34, something like that, and then we'll kind of take it from there. So I got what I wanted, but I wanted to see some of the money come out of the fear trade. Staples, utilities, honestly, Apple, big tech in general, FANG names a little bit, NASDAQ a little bit. Not to say the NASDAQ can't go up on this, that's fine, but I wanted to see some money kind of being shown that it was rotating out of this into small caps and also into value. Again, XLE had a huge comeback today, starting with that number that came out at 10:30, the crude number that came out at 10:30, and then obviously, the Fed announcement helped it further, so that's fine. XLF, how did this XLF close? The XLF was weaker. Interest rates higher are supposed to be good for financials, but again, a lot of this was already priced in. It was already priced into the market. So I didn't get the money out of the defensive areas of the market that I wanted to see. We just saw broad-based buying across the board. So we'll see where the dust settles tomorrow. We closed basically at highs today, right? Is this a new all-time high close for the SPYs? It's close. 470.74. What's today's close? 470.60. Not a new all-time high. Not a new all-time high for the SPYs by 14 cents, which is nothing. But yeah, we closed at highs. Market's looking bullish after today. We'll see if we gap up tomorrow. We'll see if we get some continuation, and it's still possible that we see continuation with rotation, and that's what I really do want to see. I want to see some money come out of that fear trade a little bit. I don't mean that Apple needs to go down to $150. And as a matter of fact, I don't even know if the IWM and the value names of mid cap and small cap can go up without Apple, or with Apple breaking down, I should say. But I think that they could go up with Apple going sideways. So can I at least get Apple to go sideways instead of just going vertical? Can I get Procter & Gamble to take a break? Again, I don't want my IRA to go down, so if you want to stay up here, that's great. But can you at least take a break and let some money get rotated into some other places? That's what I really want to see. So, again, jury's out on whether or not we'll actually see it. As far as names go, the game plan for the morning meeting today was, once again, to really have a less is more trading session. Where we opened, we had a flat open for the market. There were very few names that I liked. There were a couple things that we were trying to push a little bit, some things that might be in play. I had a good day trade in Roblox. I think some of you guys did as well. First of all, some of you guys were short it. I know Robert was short it. Some of you guys, and I hope, made money. Some of us went long. I was long Roblox. Not too aggressive. I was really trying to be primarily hands off. but I was buying Roblox in that 95 area and, catching a couple dollars out of it. I didn't even hold for the whole move to the ADMA. When he got up here, I definitely recommended to traders on the team who were still long to be booking some profit into it. But, we were trying to push it a little bit with certain one-offs that were in play that had news. But the big thing I was just trying to emphasize to everybody today was to really not trade. And I didn't do very much this morning. We were just waiting for 2 o'clock to come around, And whereas in a typical day, I probably do 85% of my trading in the first hour of the day, today I probably did 85% of my trading or more after 2 p.m. And then obviously it also helped. I can't not bring up MGI really quick because a bunch of us have been stalking this stock for a while. It's been acting really strong. And then word came out that they've been approached by, I already forget who, a private equity company, I think it was, for a buyout. And if this thing's getting bought out, I think it should be significantly higher than $8. But you can see that's what happened here. It rips up, gets halted, reopens. This pullback was... I couldn't believe that this thing pulled back to 750. When Stefan was like, I'm buying 750, that's what I was originally thinking when this opened up at 8. I was like, where could a good pullback be? And then when I was watching this price action and it was trying to hold this 780 and these moving averages were catching up, I started thinking there's no way this thing should ever be able to touch 750. He shouldn't be able to get close. He shouldn't be able to get his stock. And then when he got his stock, I was nervous. But it broke that seller. There was some crazy seller who was utilizing this news to liquidate, I think, a big position and was really driving this thing down and was showing size at certain spots also, initially at $8. And I think he just brought a bunch of his size together on the offer at 750. That 750 offer got taken. And even right away, there wasn't a big uptick on that like I would have expected. But eventually, it ticked higher, worked its way higher, and it more or less gave the $8 close that I was looking for. But if this is a buyout, we think that this thing should be at least at $12 on a buyout, which is just where it was back in July. So I'm actually somewhat surprised. I thought when they halted this, and I had some small offers out that I got filled on the way up, and then I was canceling offers. Because when they halted this thing, I was like, oh man, this thing's might open up at probably at least $9. And then they opened it at 8, and I was like, okay, let's watch this price action. I was getting heavier and heavier and heavier and heavier. and then I was starting to get nervous when it was down to that 750 that maybe the news wasn't real or something, because it wasn't trading right. And I took that one last big buy back through $7.50 on this thing, and then it started to work its way higher and went. And closed at 8. So we'll see what MGI is able to do. That was a great little win for the team today. Not even my best name of the day, though, even with that. Because it was such a good day overall. Anyway, I had a good day today. I needed it. I hope you guys did as well. I know some of you guys did, so it's good stuff. And, that's really all I got. It was all about the Fed today. We called the Fed perfect. The market did the move that we were looking for, and here we are. So, happy to take a look at any questions that you guys got. I think first from Jerry here. When looking to trade the Fed day and other news events, is that news candle usually appropriate to trade against? Was obvious today, but the past few Fed days, the first move... Yes, okay, so this is a great question. So basically he's saying, like, how do I trade the Fed day? Because a lot of the times, and this was even true today, a lot of times the first move, and sometimes the first two moves, are false. Because the news hits and the market's trying to figure out what to do, and there's volatility that's coming in, and it ticks up, and then it's back to flat, and then it ticks down, and then it ticks back up to flat, and then it actually gives an upside move, like move higher, move lower, and then real move higher. Like, that's kind of a common type thing here. I do think that this Fed meeting was a little bit different because of the expectations that we had coming into it. Not all the Fed meetings are created equally. A lot of times the Fed meetings can be somewhat uneventful. We always get volatility, but a lot of times we just get volatility and the market ends up at the end of the day going nowhere on it, and just a bunch of volatility. Today, it wasn't just volatility, it was direction. We got volatility and we got direction. That direction was higher. And again, I think that this was a little bit different. I know for myself, I had a long bias, a serious long bias coming into today's Fed meeting for the reasons that we already stated. So for me, the long bias helps because then I can act on it when the market gives me the opportunity. So the first thing that happened here, you can see it on this tail. It actually happened twice. Maybe I could look at a 2-minute chart just so we can look at it. I usually never look at anything less than a 5. But Fed meeting comes out, quick down tick, and then it actually quickly upticked to flat, and then it quickly down ticked back to these lows, and then it went back to flat again, and then it went. For me, because of my bias, which I had a reason for, the opportunity to buy was when it went back to flat, either the first or the second time, versus that low. And I think that that would have been the best way to initially execute. And then otherwise, you could have found some trades in here before it broke out. Maybe a little inside 5 here. Again, normally this time of the day, an inside 5 isn't going to matter, but it's trading on an event, so it's different. The 5-minute chart matters more, and 5-minute little patterns can come in and matter as well, right? So then we get that move higher. We pull back to the equilibrium zone. We create a little bit of a tail here on this candle. It's kind of a hammer doji. It's followed by an inside bar. The inside bar breaks to the upside. That could be a trade. And then we have this very clear kind of resistance into this, 365.50 that's intraday. That could be a trade on that break as well versus kind of these lows on this second consolidation type pattern. So those are some of the ways in which you could have looked at it. I'm not going to say that this was easy today. Especially like if you're newer and you haven't seen some of these events go by, but for me, because of the thesis, that made it easier, and that's why I think having that qualitative fundamental background is so important, right? We have a macro game plan based on what I would call like these macro qualitative fundamentals that are going to affect the market as a whole, the Fed and interest rates. And we can kind of create a bias based off that, and that can have you be a little bit more aggressive when you get some sort of, more technical type confirmation coming into play. Hope that helps, Jerry. Robert, appreciate you posting for Sebastian. What's the strategy, or what should we look for in order to trade events like today? All right, it's basically just what I went over. If you made trades when Jay Powell was talking, would be super helpful if you can explain it. So yeah, I was very focused on the Fed, and I actually came into that Fed meeting very long. So I didn't really need to be super aggressive post 2 o'clock, though I definitely did some buying in some certain spots. I honestly got very distracted when Powell was speaking because of MGI. MGI, that news came out here while Powell was speaking, came out at 2:45, which honestly was kind of annoying because now I'm watching so many things at once, and I traded a boatload. I traded a boatload of this MGI, and it really kind of became a big focus for me on it. So yeah, I hope my answer to Jerry's question helps you there, Sebastian, and then I added a little bit onto it. Someone from YouTube asking about CALT. So it's a biopharmaceutical stock. It's up 74% here after hours. I don't know what the news is. It's ripping. This is usually not what I like to go to, is these types of names. First of all, this daily chart, I don't know what this is. I don't understand how a stock could be this gappy on its daily chart that's not an ADR. And I don't think that this is an ADR. So I don't even understand any of that. The typical volume on this is so low that I would never trade it. But there's some sort of news that came out that is making this thing rip after hours here. It is up 75% or so, and it's trading on more volume right now than it does in a typical month. all after hours. So I got no opinion for you on this CALT. It's just genuinely not my focus, and I don't want to just make stuff up. Next here from Derrick. I struggle with managing multiple positions, even though I see multiple opportunities. Any advice on how to get better in trading multiple stocks simultaneously? Sure, it's also a really good question. This is one of those things that genuinely comes with time and practice. You know, I know I've said this before, and I think it's important. When I was a new trader, I could not be involved in more than 4 stocks at a time, 3 stocks at a time. 3? 4? I don't remember what my rule was. I think it was 3. Once I found that I was involved in more than 3 stocks at a time, I would start making mistakes because I would have trouble managing it. Now I can be in 25 positions at once and be fine. What has changed? Not necessarily a whole lot, except that I have got 10 years of experience under my belt, more than that, since then. And it's really just an experience thing. You know, you learn to be able to see stuff better. For me, it helps. I have a game plan for every trade that I take, and I have my position window box, which I can't show because I've got executions in there and I've got open orders in there, so compliance would not want me to show that. But I have my execution box, and what I don't do, based on my settings, like you can have it so that your orders window, if you're on Lightspeed like I am, you can have it so that it only shows like 1 stock, or you can have it so it shows all the stocks and all of your orders for every position. That's how I like to do it. I like to have it for every stock and every order. So what I can do is I don't need to watch every stock because I have a game plan for every stock. So if I'm in 15 positions, I'm watching, you know, a few of them, but I'm not watching all 15 at once. But I have orders out in the market on all 15. So when I see that an order gets triggered, I know I have a game plan, and I go see what I need to do to counter that order getting triggered as part of my game plan. Whether it's an entry or booking some profit or a stop loss triggering or kind of whatever it is. And then what I'm doing is I'm constantly typing up symbols throughout the day. Again, when I'm sharing my screen into the VTF, which I do in the mornings, you'll see how rapidly I cycle through symbols. I'm cycling through all the positions that I'm in, and I'm also cycling through a lot of stuff that I'm not in. The indices, the VIX, the TLT, the sector ETFs, trying to figure out what's strong, what's weak, stocks that I was eyeballing, stocks that we have on our actionable list of trading names for that day. That's what I'm cycling through constantly. So again, a lot of it is really just an experience thing, so just keep at it and it'll come over time, but that's some of the stuff that I do that kind of helps me. Next here from Justin. What do you do when you miss the initial up move and FOMO starts to kick in on these Fed days? You can't have FOMO. Do you think becoming more aggressive after the first pullback was the right thing to do? How would you know in the heat of the moment? Every trade has to have a setup, Justin. If you don't have a setup, you don't have a trade. You can't just look at the market going higher after the Fed meeting and just start buying stuff. You can't do that. You have to have an actionable setup. And if you miss that opening move that I was trying to describe to Jerry earlier, then you don't do anything. You wait. You wait until a new potential actionable setup comes in. Where did that happen? It happened here, and it happened here. And outside of that, if now, you know, the market was at 467 and was ripping higher like it was here, there's no way to be able to execute into this up move, in my opinion. That's going to be responsible, and it's going to give you an appropriate risk reward. It's just not going to happen. So you either you have the trade, you have the setup, you take the trade, you take the setup, or you don't. And again, I understand if anybody on the team here was not involved in this afternoon move and didn't make money on this, that you could easily be upset with yourself. And maybe you should be upset with yourself to a degree, but you shouldn't be upset with yourself and then have that cause you to do actions in the market that are going to negatively impact you. Because as bad as it is to miss a move, it's really not that bad when you miss a move. It just is what it is. The market's an opportunity creating mechanism. It's always going to create more opportunities for you. But what is really bad is to make mistakes because you're having bad psychology because you missed the move. And now, instead of not making money because you weren't involved, you're taking losses because you're getting involved in the wrong spots. That is so bad. And that's what you should be really upset over. You missed the move. It kind of just is what it is. You're not perfect. No one's perfect. You're not going to capture everything. It's not always easy. But you really have to have a trade set up with a proper risk and proper reward and probability of success in order to get into a trade. You don't have the setup, you don't take the trade. Everything always has a setup, guys. Everything always has a setup. It's just so important. I just want to keep re-emphasizing. I just want to say it 100 times. Every trade has to have a setup. If there's no setup, there's no trade. You're gambling. And you're never going to be able to be consistently profitable doing that. You've got to find a setup. And there's plenty of different types of trade setups that we go over, whether it's in the afternoon meeting or in my training program or whatever it is. Oh, that reminds me how to do something about those classes. Took a look at that. I forgot to send an email out. Anyway, Justin, I hope that helps. From YouTube, Robert Gillenwater. Oh, hey, Robert. Thank you for sharing the info and the insights. No problem. Glad you're following along. From Steve T. Just shoot me an email, Steve. Shoot me an email on that. From YouTube, Mr. Trees. How does the S&P, the SPY, and the S&P futures all stay the same price relative to each other? And if one changes in price, is there a lag before the others change? And could one take advantage of that? All those microscopic discrepancies that can come into play between those two products are taken away by arbitrage robots, high-frequency arbitrage robots that are in the marketplace. So it's all going to be done faster than the human eye can blink. And again, it's an arbitrage situation. So it's never going to happen that there's going to be a huge difference between like the SPY, the E-mini, and like the S&P cash. It just won't happen because those robots will come in and they will immediately take away that arb. So is there a way one can take advantage of it? Yes, people are doing it, but that's done so efficiently at this point that there's no real advantage. Next year from Zahor. With the Fed decision out of the way, after tapering, we're going to have 3 rate hikes. I think Asia and emerging markets to see some bid overnight. What might be in store for us when we come in tomorrow morning? Is that the rotation or the tech rally to continue or broad-based risk-on rally across all sectors except staples? Yeah, that's what I was saying earlier in the meeting, Zahora, and I definitely don't know the exact answer to that. I'm inclined to think that we're going to gap up tomorrow, and I'm inclined to think that we are not going to see the move tomorrow, assuming that we continue to rally, as broad-based as it was post 2 o'clock today. I think that the market is going to now have some time to digest this information and then possibly figure out how they want to rotate in their money. I am biased. It's a bias that the IWM is going to play some catch-up. Part of the reason for my bias, well, there's a couple of reasons for my bias. One is seasonality. As we approach the end of the year, it is typically the IWM that outperforms the NASDAQ. And one also is the information that came out today. Who does that affect the most? It affects the growth stocks. It affects the small caps. It affects the middle-sized companies, I think. So I'm and those names have been super beaten up and haven't been able to capture bids. So I'm inclined to think, though the market could easily prove me wrong, I'm inclined to think that if and as we rally into the end of the year here, that it will be with some of the money rotation that I did not see this afternoon. But only time will tell, so we'll continue to pay attention to it. It's a very hard call to make, by the way, because we haven't seen it at all. I've been saying it. I've saying it in a couple meetings recently. We have not seen the day, except for very briefly yesterday morning. We have not seen the day where money was actually able to come out of FANG, big tech, and go into value, small caps, medium-sized companies, it just is yet to happen for more than 45 minutes. So for me to think that could happen when we haven't seen it at all could easily be wrong, because we haven't seen it at all. And as a general rule, the best thing to expect in the market is the current status quo of what the market's already been doing. So if Apple's the strongest stock in the market, the smartest thing to do is not assume that Apple is all of a sudden going to not be the strongest stock on the market and that some of these other names can capture bids. The smartest thing to do is assume that Apple will be. But again, my thought process is a little bit of a bias where maybe we could see something a little bit different, but we'll see how it goes. Do I have a system for sizing up from Dave W? So first of all, when we talk about sizing up to me doesn't necessarily mean more stock. Sizing up means more risk, right? Like I could take 100 shares of something and I could risk $100. I could take 1,000 shares of something and I could risk $100. To me, that's not, the 1,000 shares isn't sizing up. It's the exact same thing. It's about the risk. So do I have a system for sizing up? Yeah, the system is a risk skew system. I believe I go over it, if you have access to it, I go over it in my in my probability class. I go over it in my probability class, what I do with the risk skew system. Risking more, which would mean more dollar risk, not necessarily more size, but a lot of times more dollar risk is coupled with more size. Basically risking more in better trades and less in not as good trades. So check that class out if you haven't already, assuming you have access. The tickers are not cycling automatically. I'm typing. I sit here and I type. Sumo, SoFi, Coursera. What are the SPYs doing? What are the Qs doing? What's the IWM doing? Well, how about the financials right now? Okay, well, how about energy? Is consumer staples still going? Is my IRA still going up in Procter & Gamble? What's Microsoft doing? Is Apple leading again? Is this Bed Bath & Beyond a piece of garbage like always? Oh, look, MGI. It wasn't a coincidence that I was the first person to see MGI moving. I think I was. I certainly got into the VTF first. I didn't know what the news was, but I immediately know when one of my stocks is moving like that, because I'm very focused on paying attention to them. Is it nice down there in Miami? Yep. MGI pivoted right in the ADMA, which is what should happen. I thought what was going to happen here, though, was that price wasn't going to go down to the ADMA. I thought the ADMA was going to go up to price. Hello from Slovenia. Nice. Welcome. I'm yet to be in the country of Slovenia, but I would love to visit one day. I love to travel. Doing push-ups to get ready for the madness. I love it. I won't mention the other part. Mr. Trees, how did you have multiple trades on the MGI green candle? Were you buying the pull? I was selling. I had offers out on the initial green candle. These are all sell dots. The green is buy dots. What you can't tell here is sizing. These sell dots are very, very, very small. Some of these green dots in here were very big. There was a big size difference between these sell dots and these green dots in here. So I was not able to actively trade this. I had small offers out in the market, and just all of a sudden I look over and my orders box is just order filled, all, like all at once. I wish I could share that. Like I was getting filled. Let's see if I can find it. I traded so much. Yeah, all in the same second here. It's always funny to me when they register, and again, it's all in the same second. But the order window box is supposed to fill, show you the order in which it kind of gets filled, but it all happened at the same time. So my order box actually shows me getting filled on a offer at $7.74 before getting filled on an offer at $7.36, which is obviously impossible. But it was happening. It happened all in the same second. So that's pretty much what happened there. There was a 3-second lag, though, actually, I'm seeing. MGI upticked to like 726, and then it was 3 seconds later that the next move occurred up to 774, which is interesting. But I'm as fast as I am, I'm not that fast. So I'm seeing the rest of your question here. You got to know the news as well. So broadly, I still this MGI up. If you're trading news, you got to be very cautious about what price you're getting versus what the news is versus where your stop loss should be. So if I'm trading a news name, the initial stop loss is always the low of the news move. So if you were fast enough to be able to type MGI up before it got halted, which you have to be stupid fast to be able to do that, and you bought stock in this move, your stop loss has to be this low. I wouldn't do that because I wouldn't do that without knowing what the news is. I gotta know what the news is. And then the thing I'm trying to assess as fast as possible is the relevance of the news versus the risk I have to take. Like sometimes by the time I figure out what that news is, I'm like, oh man, this news is great, but it's up so much at that point that if I were to buy stock here versus the news low, the risk reward just doesn't make any sense. But sometimes, especially when Pat is here, I think Pat's back tomorrow. We can't wait for Pat to be back because he gets the news into the VTF so fast. Pat gets the news so fast in the VTF sometimes that you can see that news, type up the stock, and still get a reasonably good price versus the news low for what the news itself is. And again, how much you pay up or down does vary a little bit on how good that news sounds to you. So there's a little bit of a subjective assessment that you're doing, and that's why it helps to know your companies. If you know your company and you know your current events on your company, you're going to know when new news comes out just how relevant that news is or not, just how important it is or is not for that company. And if you don't know it and you don't pay attention to the news and you don't pay attention to the story of the companies that you're trying to be involved in, it makes it significantly more difficult to know if this is one to be in or not. But the stop loss then becomes the low of the news move because that's the only spot where you know it was wrong. If it breaks this low, the market is telling you that the news doesn't matter. And I was even concerned with this degree of a pullback because I thought that this news and MGI was so good today. I couldn't believe that the thing didn't open back up at like $9 to $10. See you, Billy. But it didn't. And not only did it not do that, it pulled all the way back down to 750. I was getting a little nervous. It had some size. But all is well that ends well, right? So, hope that helps you. Gabriel's birthday today. Happy birthday, Gabriel. From Sharir, are you able to keep your pending orders overnight? No. There's no good till canceled orders for the professional trading systems. I put in sometimes 200 plus orders into the market in the mornings. There is a way to do it with a spreadsheet. I know a couple of traders here who put a lot of orders in every morning are able to have the system upload their Excel spreadsheet to get all their limit orders out at once. I've looked at doing that. For the time being, I'm still putting them all in manually. From Aaron here, thoughts on the Chinese companies? Yeah, so Chinese companies got hit on some bad Chinese news today. I mean, I still like them. I don't like that this Alibaba lost this 120 today, but it managed to close above, so it's okay. Baba had a great day yesterday. I really liked Baba as a trade yesterday. JD's another company I really like, but this chart's not looking good right now. Neil's another company that I really like, and you could possibly try to be long versus the low that it put in today. But at the current price, that risk reward is difficult. Tiger still scares me, though it's super beaten up at this point for regulatory issues. This one scared me from the beginning. I've always said, if you're being involved in these Chinese names, I really think that you want to. I really think you want to be involved in the Chinese majors. JD, Alibaba, Baidu, Neo, XPev. That might be about it. From Zohor, can you put multiple orders in one shot in Lightspeed platform instead of typing it one at a time? So that's what I was just talking about. I do it one at a time, but there is a way that you can use an Excel spreadsheet to have it all get plugged in kind of on its own. If you email me, I can try to get you some information on that. From Popeye, how do you manage stops in this environment? Do you move them? So I don't know what you mean by move them. If you have a stop loss for a trade, you should never move it unless you're moving it up to lock in more profit based on rules. For risk stop losses, you chose the trade, you know how much you want to risk, you put your stop in, that stop stays in that spot. One of the worst things you can do, one of the most dangerous things you can do in trading is to look at a trade, say, hey, I'm in this trade, this is where my stop loss should be based on this trade, and then as it's going against you and as it's approaching that stop loss, take your stop loss out and put it like at a lower price. It's literally one of the worst risk management things that you can do. So the only time you should be moving your stop after you're already in a trade is because the trade is working and you're implementing a trailing stop system. Now, how do I manage stops more broadly in the current environment? So what is the current environment marked by? It's marked by volatility. In an environment that's more volatile, you tend to need to take less size and have more space. So if in a normal market environment, you might take 1,000 shares for 10 cents risk and have $100 worth of risk. In a more volatile market environment, it might be taking 25 cents risk with 400 shares. It's the same $100 worth of risk. But the chart tells you where your stop should be. You don't tell the market where your stop should be. The chart tells you. So even in a more volatile market, you might still find trades where the chart tells you that you can take on 10 cents worth of risk. I think some of you guys did that in SoFi today versus $14. A couple of you guys were kind of buying down here versus the $14 support that we spoke about in the morning meeting. And I'm surprised that it didn't break it, to be totally honest. I'm surprised it held it because the market, the IWM, and these names were so weak early. So I'm glad that you guys didn't get stopped and that you were able to capture this rally. But this was an area you could have gotten in SoFi today for 5-6 cents risk and just had a stop loss at $13.99 or whatever, and then caught this move. So it's still possible to find low-risk setups, but as a general rule, the chart, the trade, is going to require you to give more space risk. More space risk means less tier size to risk the same amount of money. From Gabriel, how do you leave orders out in those hard-to-borrow stocks since it won't let you have orders out when you have a stop placed? Then you have to manage it a little bit more closely, Gabriel. That's basically it. You have to manage it a little bit more closely. I'll use alerts. I'll use alerts a lot of the times, especially once my risk is covered. Because once my risk is covered in a trade, I don't pay as close attention to it as when I'm kind of first getting in. So, what I might do is if I'm buying 1,000 shares, what you should do is put a stop out for the entire 1,000 shares and then cancel that stop and down tick or go inside offer when it gets to your 1-to-1 or whatever. What I sometimes do, I'm not saying this is the right thing to do. What I sometimes do is I put my offer out for 1-to-1 and I only put my stop out for half, the other half. I'm telling you, it's not the right thing to do. I'm just always honest with you guys, and it's what I sometimes do execution-wise. And then I cancel the offer and I down tick if I need to. Or sometimes what I'm doing is I have the stop out, and if it's approaching where the offer should be going, I'm canceling the stop and putting the offer out, and then I don't get filled on the offer, and it's coming closer to where the stop's supposed to be. I cancel the offer, I put the stop back in. It's a little bit annoying, but it is what it is. But then once I get that first kick, then I'll just put an alert out. If I have other sell spots that I want to sell, I'll just put an alert out 5 cents in front of it, and then leave my stop in, and then I'll go back. My alert goes off, and I go, oh, it's almost where I want to sell some stock. I'll take that 100 shares off my stop loss that I want to sell, put the stop loss in for that 100 shares less, put the offer out for that 100 shares, assuming it's 100 shares that I want to sell. So I hope that helps. From DJ, do you have a lot of support resistance levels kind of memorized just from watching the market? So much for positions you're in and for bigger stocks and indices. I do have a lot of them memorized. You know, it's funny. Dylan, who helps me with the Derrick the Trader YouTube stuff, we've been playing this stock chart game, where he takes these stock charts and prints them out. And obviously doesn't say what symbol it is, doesn't even say what price it is, and I have to just look at the chart and see if I know which chart it is without seeing any of the actual information except just the movement. And last time we did it, I got 9.5 out of 10 right. Granted, he was doing it primarily with stocks that I trade. If he was doing it with stocks that I'm not involved in as much, then I'm probably not getting so many of them right. But he was giving me names that I was already in and names that I trade a lot, and I was able to just look at the chart and go, oh, this is Apple. Anyway, but I'm also paying attention to, I have a daily chart up all the time, so I'm constantly watching the daily chart. Yep, trim and trail Popeye. So raise my stops based on my trailing stop rules, which are in my game planning class. Whenever you don't get filled on a bid by 1 penny and then it pivots, do you ever chase it? Filled by a bid on a pen. So you mean trying to enter? Do I ever chase it? Yes, but there's always going to be a limit on that. I might be willing to pay up a little bit more than the price that I originally wanted, but there's going to be a limit to it. I'm not going to pay up so much that it loses the trade, right? If I'm paying up so much that the risk reward becomes no good, I'm losing the trade, I'm not going to do it. But if I got to pay up an extra 5 cents or something and the risk reward is still there and I still like it and it's just not quite as good of pricing, I do that. And it's super aggravating when you do that and then it goes to the price where you originally bid. But that happens sometimes too. Okay. Yeah, Steve, I would just go with what Pat suggests on that type of stuff. From Ben, I got into SoFi at 14:11 at 11 a.m. I hate the time of day that you're getting into this, even though it works. With my stop at the low of the day, I also hate your stop loss. You got to give this to $14. You got to pay attention to the daily chart. You got to see that this low here from 2 days ago is $14.02. If you use $14.01, I can't fault you on it because this low is $14.02. When you have a round number like that, put the stop either at 14 or if it's a round number and a thick stock, you could go $13.99. If it's a round number and a thin stock, I would use 14. But you can't. The low of the day means you're being too microscopic, in my opinion. The low of the day here was 14.05. Makes the new low 14.03. It never violates the daily support. You can't. Your stop's too tight there. At 12:45, I moved my stop 1 cent under what I thought was an ignition bar. At 12:45, there's no ignition bars in here. And an ignition bar signifies a breakout, and a characteristic of an ignition bar is high relative volume. There's nothing in here with high volume in the entire mid portion of the day. Not that I would consider high volume. Maybe this candle had higher volume, maybe. So I think you misread that. But it wasn't, so I cheated the stop, move up, and I got pushed out at 115, at 14.11. Is there a trade? Yeah, so we got to take a half step back because I don't like almost anything that you're doing in this trade, Ben. You're being way too microscopic. First of all, like I already said, you got to start with this big picture. Using any intraday stop loss in this consolidation is no good. 2, executing this trade at 11 a.m. on a Fed day when we specifically were saying that we should not be trading between 10:30 and 2 today. I really don't like it. Maybe if you wanted to nibble in a little bit versus this big support level, maybe, but I hate the time of the day. I hate the stop loss. I hate how microscopic you are thinking that something in here could be an ignition bar when no volume came in. I hate that you think that you can trail a stop this tight on any stock. You can't. Your stop loss is 14. The thing, maybe when the thing is like really breaking out here at like 130, you could raise your stop to this pivot low. I think that's what I was saying to Steve T when he was in it. Like somewhere in here, like, oh, you really want to raise your stop, you can save yourself 8 cents. I probably wouldn't even do that myself. I'm probably just going to still leave it at 14, whatever, it's 8 cents. Because I like to know that my ideas are wrong. But maybe when this thing is like approaching highs, you could raise it to here. And then when a new high comes in, you could raise it to here. And then when this new high comes in here, then you could raise it to these lows, right? Those are the trailing rules. ADMA catch up, pivot, and new high, right? More than the ADMA had caught up by here. You have a pivot here, and then it's making a new high here. So it's at this time at 3:10, 15:10 Eastern Standard, you can raise your stop to here, right? So that's how you want to think about it. Cool. Yeah. I try to set my stops by tier so I can cancel or modify them as they approach, kick, etc. Okay, that helps. Usually a new high for the move, Andrew, but it does depend a little bit on the circumstance. Oftentimes, a new high for the move is a new high on the day, but really it's going to be a new high on the move since you entered the trade. But it also depends, are you counter trend, are you with the trend, but generally with the move. All right, I'm tired. It is just after 5 o'clock. Great day today. I put up some needed big P&L today. I know some of you guys did as well. Really proud of the progress that we're making as a team. So let's keep it up, guys. We called today perfectly. I love it. I will see everybody tomorrow morning.